discourage banks from harmful practices that can disrupt the payment system and might harm depositors. The supervisory framework that is in place now was adopted sometimes in 2009. Before then, we were carrying out the compliance-based supervision. But at this time, we undertook to adopt the risk-based approach, whereby the major areas of the operation of an institution is considered. The risks which they take up from their operations becomes the target area. The resources that we have is now geared towards that. So there is a discriminatory kind of consideration on the areas of the institution's operation based on the perceived risks by the regulators. So all the areas are not given equal consideration, and the resources that we have, we put them to areas that we consider more important, more germane to the operation of the institution, that can bring the institution down should there be any issues. So apart from the risk-based supervision, other processes that we carry out include ad hoc exercises on anti-money laundering and CFT, and then FX, where customers complain. Some, majority of them will be handled by the consumer protection, but some, because of their nature, we also handle them. We do cross-border visits for institutions that have subsidiaries outside the country, and special examinations are also carried out on going concerns. I will go to the reforms that have been carried out in the banking industry. From 2001 to 2010, we carried out what we call universal banking, whereby every bank was considered like a one-stop shop, that all the financial services were rendered. So, but following the global financial crisis in 2002, 2007 and 2008, that universal banking model was jettisoned so that we can effectively ring-fence the banks. So they were now restricted to refocus on the core banking activities. And the universal banking was replaced by a banking model called the Regulation 3. And so the institutions were now compartmentalized into commercial banks, merchant banks, specialized banks, which include the non-interest banks, microfinance banks, mortgage banks, and development finance institutions. We also have the financial holding companies. The financial holding companies are such that they still operate like under the universal bank. Most of the financial services can now be rendered only through the financial holding companies. The commercial banks can be authorized to carry on business on a regional, national, or international basis. Some of the off-site activities that are carried out include the issuance of regulatory guidelines. For example, we have the tied to bank charges, where the interest rates, some other commissions, management fees are stipulated so that the customers are not ripped off by the banks. We have the prudential guidelines that we use in order to assess the institution's health, especially on their credits. And then the competency framework, we find out that banks, in order to limit their costs, they employ people that might not be competent enough to carry out certain activities, which, while they are saving costs, in the other way they are harming the system, because these people are carrying out activities that are detrimental to the system. So, for instance, a branch manager now is expected to have gotten a professional qualification before he can be allowed to manage the branch, the bank branch. We also have the approved persons regime. So people are, before they are employed, they have to be cleared. We have a black book that we cross-check the names of people who are being employed in the institution, so that fraudulent people are not circulated in the system. There are some guys who they will misbehave in one institution, leave that one and go to another one and do the same thing or even more. So we try to limit that through approvals before anybody is employed. So there is no hiding place for fraudulent people in the system. Some of the experiences that we have seen in the system include the fact that fraudulent and self-serving practices among members of the board, management and staff, there are different ways that they do it. Sometimes staff will just bring a phantom credit. They will design a phantom credit and it will go through the system, they knowing that that person is not capable of paying, so thereby reducing the capital of the banks, and that is inimical to the stability of that institution and subsequently the whole system. There are weak internal and financial controls established by these institutions that we supervise. So what we aim at doing is to make them improve in the establishment of these controls. Institutions over the time too have been discovered to render false returns. Some people will just sit on the table and decide what figures they will want to send to the central bank. But the Cbn has a zero tolerance policy on this. There are systems that are being developed in order to capture some of these things. Before, we used to have only monthly returns. We went to weekly. Now we have daily returns. So by studying the trends, it makes it easy to detect some of those spikes that people intentionally put in there. Asset stripping is also one thing that we have noticed, where management could, in a way, like the buildings they have, some of them are constructed either under ridiculous values, or they make arrangements where they use the bank's funds to construct it, but claim ownership and still lease it back to the institution. Some of them you have overbearing chief executives that could carry on such things. So in order to achieve the mandate of the department and the bank, it is important that we enforce the regulations that have been established. So financial institutions that fail to comply with the guidelines are always sanctioned, monetary-wise and otherwise. So, and for the fact that these institutions fail to carry out the necessary things that they are required, CBN is prompted to intervene in order to protect depositors and the financial system. So we can be wondering why would central bank, for instance in 2009, use about 620 billion to bail some institutions. The purpose is to protect depositors and the financial system. So to conclude, I would say that the banking sector is one of the most regulated and supervised of all the sectors in the economy. So we always try to develop frameworks, and when I say we now, since Financial Policy and Regulations Department was carved out, they carry most of the development of the frameworks, but in conjunction with other sister departments. So I will say that the support of all of us, all the stakeholders, is required so that when the rules and regulations are complied with, it is for the benefit of the entire economy. So with our continued support, the banking system will be repositioned and to play its expected role in the economy as enablers, whereby they take money from surplus areas and give to deficit areas, thereby enhancing intermediation. Thank you for listening.
Good afternoon, everyone. Hall is virtually empty, but we hope our message will be taken by members of the audience. Before I start, I would like to know, there was a lady that asked a question regarding the need for the central bank to encourage banks, to, take up insurance product. I don't know whether she's still around. If she's not there, then I will just skip this intervention. Is the lady still here? Is she here? Okay. Thank you. So my name is Mustafa Haruna from the Other Financial Institution Supervision Department of the Central Bank of Nigeria. We are one of the departments under the Financial System Stability Directorate responsible for promoting a sound financial system in Nigeria and by extension financial system stability. I'm happy that Marcos came before me because most of what he said, also apply to my department. We have a joint mandate to promote financial system soundness, like he mentioned. So I won't be dwelling so much on some of the things he has already said because they are common to both of us. So my duty this afternoon is just take us through our mandate and our activities. Most of the stakeholders here are our stakeholders, in the sense that I saw in the morning hours, the hall was almost half filled by BDC, operators. Now the whole place is virtually empty. And then of course microfinance banks. Other stakeholders are the primary mortgage banks. I didn't hear anybody from the primary mortgage banking sector here. We also have finance companies. There are not very many in this part. And of course there are other players like the Nigeria, mortgage refinance company, which is one of the new kids on the block, one of the new entities recently licensed by the central bank. So these are the array of institutions that we supervise. And our primary mandate, similar to the Banking Supervision Department, is to conduct off-site surveillance and on-site examination of OFIs. OFIs are other financial institutions. So we supervise them at two levels. On-site, that is when we visit these institutions to go and examine their books. And off-site is what we do on an ongoing basis in the bank by analyzing the returns they send to us and other information that we piece from the market and other sources. Please, you are fast. Can you go back, please? Yeah. Where did we derive our mandate from? Our mandate, like the banking supervision also, is pursuant to the bank's mandate, which is to promote a sound financial system in Nigeria, as enshrined in section 2D and 33 subsection 1B of the Central Bank of Nigeria Act 2007, and of course some sections, relevant sections of the Bank and Other Financial Institutions Act 1991, which is OFIA for short. Sections 57, which is the Other Financial Institutions Supervision Department, is responsible for supervision of some of these institutions I just mentioned, like the microfinance banks and the BDCs. Next slide, please. Yes. So, in addition to the Banks and Other Financial Institutions Act, we also issue from time to time, in conjunction with the Financial Policy and Regulation Department, guidelines, directives, circulars, policies, as the case may be. And currently we have guidelines that speak to different sectors, like the microfinance banking subsector, the primary mortgage banks, and in all the regulations, there are some common areas, some commonalities in terms of the provisions. Almost all the guidelines have provisions relating to what activities banks can undertake, these institutions can undertake, and what activities are prohibited. There is also provision on licensing, what categories of OFIs you have, what are the capital requirements, provisions relating to corporate governance, how are they governed, prudential requirements, and like my colleague also mentioned earlier, provisions relating to anti-money laundering and combating the financing of terrorism compliance. As we all know, money laundering is a major issue, not only in Nigeria but also globally. So we have regulations. So we have, and they can operate, nationwide, including the FCT. What it means is that the entire country is their oyster or their playground. For states, the capital requirement is 100 million, but they can operate within, a state or the Federal Capital Territory in Abuja. And the unit, which are the ones we have, more in number, we have 20 million naira as the minimum capital requirement, and they can only operate within one branch, only in a local government. Next slide. So these are primary mortgage banks. Like I said, I didn't hear anybody from a primary mortgage bank today, but these are the two broad categories that we have. There are those with, national authorization. Like the name suggests, they can operate across Nigeria. including the FCT. State, 2.5 billion naira capital, but they can operate within the state or the federal capital territory. Next slide, please. Yeah, then we also have development finance institutions. These are institutions in the mold of things like Bank of Agriculture, Bank of Industry, and Nexim, and quite a number of them. We have over 5 currently. For wholesale development finance institutions, there are 2 basic models. We have the wholesale, we have the retail. This was pursuant to the new guidelines that was recently issued by the Central Bank in 2015, where development finance institutions were categorized into 2. So going forward, this is the category that we're going to have. Hitherto, we've always had retail variety, but now we are going to be having a wholesale, and that like the name suggests, the wholesale development finance institution will be providing wholesale funds to participating financial institutions for all lending to enterprises in identified sectors like maybe manufacturing, agriculture, solid minerals, SMEs, and what have you. And they can operate in more than one state and the FCT. The same thing for the retail DFIs like Bank of Agriculture, Bank of Industry. These are all retail DFIs. Recently we have a new one called Development Bank of Nigeria. It's going to be like a wholesale DFI. The retail DFIs will be lending directly to enterprises. You know, they have their customers, their companies, SMEs, or organizations in identified sectors. They operate also in more than one state, FCT. Next slide, please. Next slide. Yes. Finance companies are also some of the institutions that we operate, we supervise. Finance companies, they are entities, finance, institutions, financial institutions that operate in the mid-tier, of the, financial system. They typically, fund SMEs, by, extending, credit to these class of borrowers. Thank you. And then we also have BDCs, the Bureau de Change. The capital requirement is 35 million naira. They operate and open only 1 branch. Like I said, we have the Nigeria Mortgage Refinance Company with a capital requirement of 5 billion naira. It was recently established, basically to provide short-term liquidity and or medium to long-term funding or guarantees to mortgage loan originators. Like the primary mortgage banks, if they operate, Nigeria Mortgage Refinance company steps in, to provide liquidity, for the mortgage sector, just so that, they will be able to create more mortgages. Good. These are just some numbers relating to the landscape of the OFI subsector as at March 2017. We have a total of 4,213 OFIs operating in Nigeria. OFIs, categorized into the microfinance banks with 984 nationwide. 8 of those are national institutions, 125 state microfinance banks, and 851 unit microfinance banks. In terms of distribution, the microfinance banks are unevenly distributed across the country, with the southwest accounting for 35%. So what it means is that more of the microfinance banks are concentrated in the southwest for obvious reasons. Lagos is the commercial capital of Nigeria. Northeast comes a distant, lags behind with a paltry 4%. Paradoxically, the Northeast has the largest landmass, and unfortunately, they have just 4% of these 984 institutions. So, Hajia, Northeast is a challenge. No, she's Northeast. No. State of origin is Northeast. Next slide, please. So this is just to further add to what I just said. There is, high clustering in the southwest, moderately, distributed in the southeast, north central, and south. With I think southeast has about is it 18, north central has 12, and south-south, there's a table that will show that. But in terms of spread, the northwest and the northeast. Northwest has, I think, 12, 2 or thereabout. But in terms of when you consider the, size of the northwest, relative to institutions in the northwest, the, distribution is very sparse. The sector is highly diversified in terms of the size of the operations, the capitalization, the sophistication, and the clustering. There are some institutions that are highly sophisticated. That is on one side of the spectrum. On the other side of the spectrum, you have institutions that are just down there, at the lowest rung of the ladder, in terms of, sophistication, in terms of capitalization. So the same thing with the primary mortgage banks. We have 34 currently. Out of that 34, 10 have national authorization, 24 are state institutions. Just like the microfinance banks, they are also unevenly distributed among the 6 geopolitical zones, with the southwest again, leading the pack. Northeast this time around is just 3%. Developing finance institutions, there are 6 currently. There used to be 5 until recently when the Development Bank of Nigeria was added. The one, shaded in red, NEFON, is now, moribund. It is no longer, in existence. That's why we shaded it in red. It's no longer an institution. Next, what's wrong with the... So anyway, I will just move on to the next item before they flash the screen. There are, just like any other sector, the sector also, is beset with so many challenges. And some of these challenges include things like, low, skills and competencies of the operators. There are issues around, false rendition of returns. There are issues around, undercapitalization, quite a number of, challenges. But the central bank, the other financial institution supervision department, consistent with its mandate, it has been, making efforts to ensure that these challenges are, addressed. So, I wouldn't like to waste much of our time. If the PowerPoint comes on, basically the message here is just to walk you through the activities of the other financial institution supervision department, highlighting the different types of players that they supervise. And of course, I showed you the distribution. We are here in the Northwest. We also, the institutions, the distribution as far as the Northwest is concerned. And of course, like I mentioned, there are quite a number of challenges. One of which again is this morning we talked about the BVN. There is very slow BVN enrollment in the subsector. In fact, until recently, the central bank had to kick in by coming in to see how we can, ramp up, the enrollment, of, the microfinance banks, notably, so that they can all be, their customers can be enrolled, on BVN. There are quite a number of them. When the slide comes on, since we are going to distribute them to participants, you'll be able to go and read them on your own. On that note, I would like to rest my case. Thank you.
Thank you very much for a wonderful presentation. I'd like to proceed to the next. You observe that we are skipping branch operations department's presentation. So we're going to questions and answers now. The next item is questions and answers, and I'll hand over the microphone to the director.
Ladies and gentlemen, we promised ourselves 4:30 and we are moving towards that. I can understand after a heavy lunch, we are a little bit communicating with the angels. No harm in that. And some of our guests, I know they came from Kano and they formed the majority of the of the attendees. I'm sure they are on their way back. We wish them safe journey. Now, on these three papers presented, okay, they were saying you are not around. You are around now. Huh? Oh, she's not the one. Okay, I'm sorry. Do we have questions either on the presentation by currency operations, banking supervision, or office? Do we have questions? Yes, sir. Let's have all the questions and then we'll take the answers and call it a day. Yes.
My name is Ali Rabi from Kano. I had Kaika Birudi Chen. Precisely my question goes to the last speaker on office. I wanted to know what makes CBN to continue registering Birudi change. Particularly, most of the registered BDC that we are having on the ground were not originally the BDC operators, but barely some ex-civil servants, some are even current civil servants.
Any other question? Any other question?
Good evening all. My name is Baba Aminu, representing Heritage Bank. My own is not a question, it's more of a plea with regards to the FX for SMB. According to the guidelines, it states that for an SMB to be able to purchase the FX, it has to operate a bank account for a maximum of 6 months. So because of that, it has become a challenge for us because most of them have been registered newly, while some have opened for more than 5, 4, 3, and 2 months. But because of the policy that says they must operate an account for 6 months, most of them will not be able to purchase the FX. So please, it's a plea to us if the CBN will look at this particular policy. Thank you.
Aruna, maybe you should
Thank you. I'm going to answer the question even though there is a department, like I mentioned, the Financial Policy and Regulation Department, which is responsible for licensing new institutions. However, you will agree with me that the guidelines specifies what the licensing requirements are. So to the extent that you are able to meet those requirements, there is nothing stopping you from being licensed, so long as the central bank is satisfied that you've met those conditions or the requirements. So that is my short and direct answer to your question. But yes, we have quite a number of, you can say there is a proliferation of BDCs with about, because unfortunately the slide went off. You would have seen that currently there are well over 3,000 licensed BDCs. And some of these BDCs are just, in a briefcase. They only operate in the briefcase. You are an operator. So once you meet the requirements, and it is the discretion of the central bank to decide whether to license you or not. I think that is the long and short answer to your question.
Thank you. I think the real issue is even the BDCs themselves. When you look at their history, right from the 80s and now, there have been a lot of changes. You will agree with me that there were times when security agencies were chasing BDCs all over the place. Because I can remember vividly, very, very vividly, that was 2007, when an old BDC trader, came to Central Bank and said, oh, that it is good to live long. You see, in those days in Tinubu, they were chasing us all over the place. Now today, it is the same government that is calling us to give us dollar to go and sell. You know, so what I'm trying to tell you is that it's business. And central bank always takes a position. If the bank believes that the more BDCs you register, the better for the market, so be it. We cannot say why are there so many stockbrokers in the stock exchange. We cannot say where are there so many stores in the market. No, the market system works on the presumption of many buyers and sellers interacting to have a price discovery. Where you have fewer sellers, you have a monopoly or you have a cartel. After monopoly, you have cartel. But where you have plenty sellers and plenty buyers, you see inventiveness, you see innovation, and you see price discovery. And the system itself will weed out those who are not serious and those who are serious. And that's exactly what is happening in the forex market today. Some people felt that there was a lot of money to be made, so they rushed into the market. CBN now decided to raise the minimum capital requirement. Before it was 10 million, isn't it? Before it was just 10 million. CBN now decided to raise the capital requirement. And because of that, many people left. Then those who can meet the capital requirement, even though they may not have the technical skills like you are saying, decided to come in. As at today, there are still some that do not want to come and take their allocation, simply because even though they are registered, they have issues with how to sell. So it's just like that. It's a market thing. That's the best way I can interpret it. You know, I remember in Abuja, another example I will give you, at Sedi Plaza. There is this our dry cleaner. You know, he opened shop around 2006, since when Sedi started. So there was a day there to give him our clothes. So he came out and he recognized some of us. We were just gisting. So he said, yes, you people, I will always know you and recognize you. I've seen a lot in this business. There are times when I will have customers, they will come and drop 20 jackets. They will drop 15 agbadas at the same time. But they are all gone now. You who have been dropping 2, 3, every 2 weeks, 3 weeks, you are still coming back. Huh? You get what I mean? So that is how the market works. He's a bank, he will tell you. He's a banker, will tell you. You know? They know that there are certain customers they have in the bank. They know them day in, day out. There are some of them, when they leave, they will not come back until the end of the rainy season. Now when they see them, they know, yes, they have come to deposit their sales of crops for that year. That's how the market is. So CBN cannot say, okay, those ones are registered, let's stop. If there is need and there is demand, CBN will say, okay, let the market take care of it. We have given our requirements, you have met it, fine, take the license, go to the market, see how you can play. If you can't play, you can come back and say, I want to withdraw my license, I want you to give me my deposit. Some have come and done that. Abi, have they not come? Yes. They will come and say, this thing I'm no longer interested in. Give me my initial deposit. I want to check out of the market. Fine, and BC Lagos is there. He is the one who pays them. Abi, you are the one who discount their TVs and give them the money. So it's just a market thing. And that is what we want to encourage in CBN. You remember in the morning I was saying that we want to move to a market-oriented economy, but we are not in a rush to move there because we are aware we operate a fragile economic system. The institutions are not very, very strong. So if you just rush into open market like UK, like US, you will end up with much more problems than you would wish. So we move cautiously. That's why we call it guided deregulation. We are watching the market. We are trying to adjust ourselves. We know our destination, but we're not rushing to go there. And I assure you, as we move along and the market becomes more efficient, the dollar availability becomes better, you will see more and more people who are ready to do the business seriously, getting serious. And those who cannot do it, getting out of the way. And that's how it should be. That's how the market should operate. You know? So that is it. On your question, it's the same thing. You see, like DGCS said, when central bank wants to introduce a guideline, they look at so many things, you know, and the number one thing it looks at is the economy and its mandate. You know, within a certain cycle, it's just like, you know, a cell. The individual elements in the cell can be fighting each other, but at the same time, they are there working for the cell. So within a certain activity, there can be different stakeholders. And these different stakeholders may not necessarily see things the same way. You are a stakeholder, you are a banker, you are a financial intermediary, you want to make money, you are selling FX, and you have customers. So you are looking at their requirements and you are feeling for them. Fine and good. But maybe the regulator may come and say, how do I know that it's not just coming into this because there's FX to be made? How do I know that he's a serious-minded MSME? You know, because the reason is this. Most economies of the world, most strong economies of the world are really powered by MSME. The German economy is 60% MSME. All these big companies you have from Germany, they are not the real ones powering the German economy. So MSME is very, very important to central bank. Unfortunately, and they are by far the highest employers of labor. Apart from private people who do their own work, small-scale industries are the ones who employ most labor. You go to a mechanic garage, you see maybe the chief mechanic with about 20-30 people working under him. You go to somebody making doors and windows, you see about 15-20 people working under him. But the fact of the matter is that the Nigerian economy is such a way that they just have to import raw materials because of past policies, and you cannot just stop it at a go. And if you ask them to go and compete with the likes of PZ, Dangote, and the rest, you are a banker. If an MSE man comes now and says he wants $50,000, and Dangote comes now and says he wants $1 million, who will you listen to first? It's clear. It's clear. We want Dangote, we also want MSME. That's why I say it depends on how the regulator sees it. Each one is serving the economy. Each one is serving the economy. Because a typical banker would prefer a Dangote. In fact, you will even give him prime lending. If your lending rate is 24%, you will beg him to come and take a 16%. Because you know across his business lines, you will make a lot of money. Even the deposit he will start bringing is enough for you. You know? So what central bank does is that it targets, just like Director SMD said, and the representative of the DG said, central bank targets a particular clientele and develops policies after a lot of consultation. So the reason why we put that 6 months is to show evidence that that person who is asking for forex must have already established an MSME. If you have never had one, you wouldn't start asking to import. If you are going into piggery or chicken farming, unless you have a chicken farm that you want to import the feeds, You can't come to me and say, I want to import feeds, and say, okay, why is your chicken farm? None yet. It doesn't make sense. So that is why there must be a starting time. And that 6 months is what is regarded as enough evidence to show that you are in that business. I think you understand. Yes. So, sorry.
You see, some of these issues, if you look deep, you realize that it's the institution that is being protected. Why? Because 6 months to me is very, very conservative. In any business case assessment, you are looking for annual financial statements. You've not even gone through 1 year and you're in business. And it is an option for the bank to look at some of those basic standards and then see a way to encourage startups, because they are considered as startups. That's why even the 6 months was given enough. Now within that 6 months is just to see that you've been able to settle, because FX is a very volatile market. It can wipe out your capital by a single line mistake. Now looking at it, even visa application to some countries, they said they need 6 months statement of account. It's not the months thereafter. They're trying to look at the behavioral pattern. If for instance now they say 6 months account and you have opened the account, it has been inactive for 6 months, are you really in business? This FX, you can buy it today thinking you will do one thing or the other. In no time, if depreciation comes up, you took it for a purpose, you would end up losing, because you are not buying it for trading. The nature of the import, export and the rest of them. So when the bank is given 6 months, it is just an option that is not for the interest of the bank, because CBN is not after profit. It's not to gain, but the success of that business for which you are coming up. And at the same time, they are looking at, you know, some of the arrangements you will make to achieve whatever you are trying to. You recall when they started that it was a cry from the SME sector that yes, you are giving much importance to manufacturing, you know, the big companies. What about the SMEs? And it was very clear that the SMEs were much more at the mercy of the what I call the parallel markets, be it the unofficial or the official BDC. And they are finding it difficult to get it at that rate to have a profiting business. So it's listening here of the CBN that said, let us look around. What can we do for the SMEs specifically? And then now they brought up what by their capacity, competence and resources, what can be ideal. And then they came up with so many options for you to actually, you know, get to that level. And of course, having it started now, things can change. It all depends on the pattern as we move on, because there are other parts of the interventions that do not even require this kind of 6 months. But there now they'll be looking for certain conditionalities. So once these things come like this, we look up and see what best we can do, and we'll be able to appreciate the decision making coming from the CBN.
Thank you very much. I think we have come to the end of today's session. Let me call BC Kaduna to help us close the session with a prayer. Distinguished ladies and gentlemen, thank you very much, especially those of you who have stayed until we cross the tape. Thank you very much. You have won gold. Thank you.
Let us all individually pray to God for the success of today. And as we depart from here, God will grant us rest